Spain will this week discuss ECB aid with its Eurozone partners, but insists it is in no hurry to make an official request. The Spanish people have made their feelings clear, and so have financial markets. Slightly different points of view, mind you. I'm Jamie McGeever, and this is today's Market Pulse. With me is Reuters bonds correspondent Will James. Will, Spaniards very much opposed to the idea of Spain seeking aid, particularly any tight conditions that may be attached to those loans, yet investors continue to buy up Spanish bonds.
Yeah, I mean, the market has really taken this as a positive, what was announced last week. But I think if we're going to see yields fall much further, we need to see the positive momentum continued. We need to see the ESM rule in favour of, the German Constitutional Court rule in favour of the ESM this week. And then eventually we need to see signs that Spain is willing to take that bailout on.
The Spanish-German spread's coming below, almost below 400 basis points, and the yield itself, the 10-year yield, heading further south, of course. Could we see 5% soon?
Yeah, we could do. I mean, it relies on those bits falling into place, and with that, international investors will start to come back into these markets, and that will be the real thing that drives yields lower from here.
It seems a strange thing to say, of course, but a country, Spain, for example, seeking official aid is now seen as a reason to buy bonds and not sell them.
Yeah, I mean, looking at it from the outside, it's bizarre, but the markets gave their verdict in July. The way that Spain's finances were being run was not good enough for bond investors, to buy their debt at a sustainable level. So the next best option now is for the ECB to be buying their bonds, and for the attached conditionality that comes with that, that's preferable.
In terms of supply this week, we've got Italy coming to the market on Thursday. Of course, this will be the first test of investor appetite for Italian bonds since the ECB last week.
Yeah, with this one we really are, we expect the sale to go well. They haven't really struggled to sell their bonds. It's been the yield that's the problem. There's always demand there from domestics. What we're looking at here is whether international investors have really bought into what was announced, and whether they come back into the sale and again push yields beyond what domestic demand can do. So.
And of course, it's a sale of long-dated bonds, so it's not just the 2-3 years that the ECB will be buying.
That's right, yeah, and that will tell you how much they're buying into the plan. Whereas previously with LTRO and the rest of it, it was all focused very much on the short end, which kind of was an early indicator that people weren't really thinking this was a solution to the crisis. So
I must clarify the bonds the ECB might buy, not will buy, because of course Italy hasn't requested aid yet. Just to finish up then, Germany also coming to the market this week with a 5-year sale. Now, are we looking at another technical fail?
We could. I mean, you can argue whether it matters or not, because the yields are so low on German debt, and they're still selling it, and all they would need to do to sell it is for yields to just rise a little bit. There's still demand. There's not worries about Germany, but whether this auction fails or not will depend on sentiment going into it, particularly about what the Fed is going to do. There's strong expectations they're going to announce more quantitative easing, in which case that will boost demand for core bonds in the US, and that will drag demand for bonds up with it. So if expectations are still pointing in that direction, that sale could go well. But if they've kind of got overblown, overheated, we could see another failed auction. Yeah, but it's not a huge deal in the grand scheme of things.
Okay, Will, thank you very much. That's all from us for now. There's more on Reuters.com and inside our platform, of course, including interviews with senior EU policymakers at the Ambrosetti Forum in Italy. I'm Jamie McGeever. This is Reuters.